All right, so I welcome you guys to the first module, if you can put it that way. For our learning, we have a curriculum, and then, of course, this is the first part of our curriculum, which is, what is Forex. And as I have it written here, the Forex market is actually a part of the larger financial markets. What I'm trying to say is that there's another market that is called the financial markets. And where's the financial markets? Before we proceed, okay, so even as you study, yeah, one of the things I want you to make your best friend is either Google or Chat GPT. Okay, either Google or Chat GPT. So let us check it here together. What is the financial markets situation? No, let's check for markets in itself. A financial market is a market in which people trade financial securities and derivatives at low transaction costs. Some of the securities include stocks and bonds, raw material, precious metals, and on and on and on. It is inside this larger financial market that we then have the Forex market itself. Why should you know this? You should know this because there are just other parts, So you see people talking about crypto, and you must have heard even me myself talk about crypto before. I've never learned anything that has to do with crypto as it were. It is the knowledge of the Forex trading that I have that I use in investing in the crypto markets. Take note of my choice of word. I said invest. I don't trade crypto. So I have a knowledge of investing. I have a knowledge of Forex trading, which is what we're about to learn. And then that is what I use to invest in the crypto markets. So the thing about the technical part of Forex trading is that once you've learned the technical analysis of Forex trading, you can actually use it to trade stock, synthetic indices, cryptos, commodities, actually, provided you've learned them very well. So to put a better definition to everything, what is Forex? Forex is actually an abbreviation for the word foreign exchange. That's it, foreign exchange. You get so FOR and then EX. That's where the word came from, Forex. And foreign exchange basically, oh, pardon me. Foreign exchange basically is just the exchange of your currency, for a foreign currency. Long story short, that is what Forex is all about. So when you say Forex trading, Forex trading, Forex trading, they are simply talking about the trading of foreign currencies. Basically, that's the meaning. Now let's move to the next one. It says, what can be traded in the Forex markets? Actually, since we are talking about currencies, what can be traded in the Forex market is actually currencies, currencies of countries against another country. My current place from recording this, class is Nigeria. And on the average, an average Nigerian knows the dollar. When anything gets expensive in the markets, and even the aboki that is selling, broom or anything, and you ask him, because I had that experience and it was very funny. Like I went to the market, I wanted to get broom. I was asking the guy, why is this thing super expensive like this? And I was saying dollar don't cost. I like what's consign dollar, consign broom. But what I'm just trying to drive at is that an average Nigerian knows the dollar currency, yeah? So what I'm trying to say is that what we trade in the Forex markets are currencies, currencies of different countries. However, on the CFD market, I'll see explain. We have CFDs here. In the CFD market, it is not every currency that you can trade. However, in the larger picture of the Forex market, what we trade are currencies, currencies of one nation against another. So take, for example, if you've gone through baby pips, I'm sure you must have seen the example of the airport scenario, yeah? Okay, so my name is John, and let's say I'm based in the UK, maybe London to be precise, and then I have my pounds, and I want to go and get something done either in Japan or in China. That's Asia. So I have my pounds. Fact is, I can't spend pounds in Japan. What they spend in Japan is the Japanese yen. So with my pounds on landing either in Japan or before I take off at the airport in London, I have to go to an exchange and then tell them, oh, I have so amount of pounds. I want you to give me the equivalent in yen. That simple transaction that took place, actually, that's Forex trading in the simplest way. The only difference is that we now trade it on a platform, but that kind of a person is trading it physically. Do you understand what I'm trying to say? So we trade it on platforms. Why those that are traveling, those that are into, selling of goods and services, importing and exporting, they are doing it on a physical level. So the foreign exchange market is wide, very wide. So basically, just to answer the question, what we trade here are currencies, currencies of one country against another. Now, how do we make money in the Forex, in the foreign exchange industry, or in the Forex markets? So let's paint a picture and let's paint a scenario, which is that this is, let me use the Naira and then the dollar, for example, or okay, let me just use Naira and then the Japanese yen, for example. So in a situation whereby you hear the news that there will be no longer importation from Japan into Nigeria, it may sound bad, but in the real sense, it is good for the currency in the sense that since there will be no more importation from Japan, we would need less of their currency. And when we need less of their currency, the value of our own currency would increase in respect to the Japanese yen. So let's assume that initially before now, since I used to trade with Japan, I have more Japanese yen than I had naira. I had more Japanese yen than I had naira. The moment I hear that news, what will I do? I'll go and sell my Japanese yen. Because if I don't, in the nearest future, the value will reduce. And since I'm not living in Japan, I'll have to convert that money to naira. Do you get what I'm trying to say? So that's how we make money. But that's for a situation whereby the dollar and the naira is gaining strength. Let me now use the scenario I know we all can relate with, naira to dollar. So naira to dollar, take for example, a new product comes out in the UK. For example, iPhone 16. Once iPhone 16 comes out, even though it is being assembled in China as it were, at the end of the day, we still need dollar to buy it. The fact is, at that point in time, there will be influx of the need for iPhone. Trust me, in those kind of season, you realize that the value of dollar to naira will increase. But that's even a deeper example. Let me just use a simpler example that we can all relate with. I'm trying to think of one off the top of my head right now. So let's say, for example, I have naira, and due to some war and insurgency in Nigeria, what will happen to the naira value? The fact is that the naira value will drop. In such scenario, one of the things people often do is they go and buy dollar with the aim that it will increase against the naira. Are you getting what I'm trying to say? So that way, that's how people make money. So say, for example, before insurgency, before insurgency, oh, sorry, Bruce, that was a mistake. Yeah, so before insurgency, one naira was equal to $1 was equal to 1,400 in naira. That was before insurgency. Fact is, insurgency, terrorism affects the economic value of whatever country it is happening in. You can check that out. And at the beginning, I just sensed that, okay, since this terrorism is about to begin, Naira will lose its value. Let me go and gain dollar. And then I packed, let's say, 1.4 million Naira to go and exchange for the dollar. What this will give me is $1,000. You can do the mathematics. That will be 1,000. That will be 14. Hey, Jesus. That would be 1.4 million divide 1,400. So the answer will be 1,000. So in the nearest future, the insurgency resides, and we can see that the economy of Nigeria is beginning to bounce back up. But between when I bought this dollar and that time, when the economy will begin to get balanced, the naira to dollar has increased from 1,400 to 1,800. That is 1,800 naira for $1. Now I want to exchange my $1,000 back to naira. That would be what? That would simply be 1,000 times 1,800. I'm sure you are following the mathematics and it is making sense. So what will be the answer to this? The answer to this is as simple as 1.8 million naira. So before I bought dollar, I bought it with 1.4 million naira. Now that I'm selling it for 1.8 million naira. Have I made profits? Yes, I have. And how much did I make? That would be 1.8 million naira minus 1.4 million naira. And what's the answer to that? The answer is 400,000 naira. So as a result of taking advantage of the difference in the currency price that I think should happen between the naira and dollar, as a trader, I've made 400,000 naira. Yes, you can't trade USD NGN on some broker platform, but this is just a typical example of what we do in the Forex market. And of course, the same way you made profits, can you make losses? The fact is, yes, you can. Because let's now assume that in the midst of that insurgency, the Nigerian government also now comes out and say we want to stop importation. I hope you know that part of the reasons why the naira is weak against the dollar is because of importation. We are demanding more for their currency than they are demanding for our own. So in a situation whereby both in the midst of that insurgency, then the Nigerian government comes up and say that we would stop importation of goods from abroad. We will be making our own goods and services within the nation, and we will also fight this insurgency. The fact is, what will happen? Naira will gain strength. However, this person has gone ahead to buy dollar already. Unfortunately, when the person bought the dollar, the person bought for 1.4. Let's leave that example. But eventually, it dropped from 1,400 to 1,200 per dollar. Okay, so this will be 1,200, and then, let's just clear it off and start again. So having bought from the beginning, the person bought $1,000 for what? He bought it for 1.4 million naira. But now, there's good news. Dollar has dropped, naira has gained strength. And how much is it now? 1,200 naira to $1. By the time the person is going to convert his money back to naira, how much will that be, friends? That will be 1,200 times is $1,000. And what's the answer to that? The answer is 1.2 million naira. So that person has lost 400K. But let's finish the mathematics. So that will be 1.2 million naira. That means the person has lost 400K because that will be 1.2 million minus the initial 1.4 that he went to use to buy the dollar. And what's the answer to that? That will be minus 200,000 naira. This is how we make money in the Forex industry. By looking at countries and postulating that, okay, the pounds against the dollar will gain strength, or the pounds against the Japanese yen will lose strength. So let's talk about CFDs. This thing I just talked about now, anybody can easily practice them over a Bureau change. But the fact now is, so take for example, is it with your $10 you want to participate in Bureau change and make great money? No, you can't. You can't. You just can't. So there are people who now came together and create a product that simulates the movement of these currencies in the real life. Take, for example, let me share with you what I'm trying to say. So currently, let us look for $1 to naira. Can you see $1 is currently 1,542 naira? Now, let us come to the Forex market charts and also check for USD NGN. This is it. And what's the current price? Can you see 1,532? Almost no difference. So what I'm trying to say is that some people then came together and created a product called CFDs that is a typical representation of what is happening with the currencies in real-time sense. Do you get what I'm trying to say now? So meaning that everything happening on this chart is exactly representing what is going on between the US dollar and the Nigerian naira. So that is basically how we make money in the Forex industry. Looking at one country's economy and then making assertion that, okay, oh, the dollar against the pounds should drop, and then the dollar against the Japanese yen should increase. Basically, that is how that one works. That is how we make money in the Forex industry. So you look at the Forex industry and you look at what is going on between GBP, that's Great British Pounds, and dollar, and you're like, looking at what Donald Trump is trying to carry out now, it will affect the US dollar currency. And against the pounds, what will happen? That means that dollar will drop, pounds will rise. So what do I want to do when I get inside the market? I want to buy GBP USD. And that will lead us to the next topic, which is what? Base and quote currencies. Base and what? Quote currencies. You know, in the market or in the Forex market, you can't trade one currency on its own, just like in every other market, in the sense that you can't trade naira alone. You can't trade dollar alone. It has to be dollar against naira or naira against dollar. So what we are trying to say is you cannot, when they say foreign exchange, what that simply means is that we are exchanging one thing for the other, isn't it? You can't exchange one thing. So in the Forex market, we are always dealing with two currencies. That means, for example, I gave the example of naira and dollar. Those are two currencies. When I have the naira and I take it to the exchange and I buy dollar, that's an exchange between two currencies. I hold the dollar. Maybe after the dollar has increased or decreased and I want to sell it back, I go back again. That's another transaction between naira and dollar. What I'm trying to say is that in the Forex markets, we always trade two currencies at the same time. At the same time. So we have what are called base currencies and quote currencies. And we have a multiple stack of currencies. Look at them. This is Euro USD. This is GBP USD. This is GBP JPY. That is pounds against the Japanese yen. This is USD JPY. The US dollar against Canadian dollar. So before we go further, one of the things I want you to understand about all these things is that you see all these currencies, they are often represented with three letters. And most times, maybe 80% of the time, the logic behind them is that the first two letters are the letters representing the country that spent that currency, while the last letter is for the name of the currency. So let me take that again. Currencies are usually represented with three letters when you check it very well. Like the South African rand is ZAR, and then the Ghanaian cedis is GHS, if I'm correct, no, GHC. And then what else again? The Nigerian naira is NGN. What else? The US dollar is USD. The British pounds is GBP. What I'm saying is that you see those three letters. Some of you may not even have paid attention. Even me myself, I didn't know until I got into the industry here that for those three letters, the first two are abbreviations for the country that spends the currency, while the last letter is the first word of the country's currency. So Euro, Eurozone, that R, I don't know what that I mean, but that's why I said maybe 80% of the time. But for US dollar now, you can see United States dollar, USD, GBP, Great British Pounds. You get it. JPY, Japanese yen. CAD, Canadian dollar. AUD, Australian dollar. And the example goes on and on. Just as I gave us for Nigeria too, which is NGN, Nigerian Naira. GHC for Ghana, Ghanaian cedis. So currencies are always paired in twos, and the first one is always called the base currency. Let's check Google again. So base and quote currencies. Can you see? A currency pair is a quotation of two different currencies where one is quoted against the other. So when they quote them like that, just like we have USD, NGN, GBP, USD, we have several examples in the, in the Forex market, Euro USD, GBP USD, GBP JPY. Let's just go, NZD card, that's New Zealand dollar. And we have multiple examples. So you always see currency pairs in twos. That's why they are called a pair. And what we need to understand is that in this situation or in this pairing, the first currency is called base currency, and then the second one is called quote currency, just as we can see here. Let us check here. So you can see base. So we have the base currency and then we have the quote currency. Basically, that is just how it is. Now, the logic behind the base currency is that when you are in the market or when you are on the charts, unfortunately, I don't have an MT4 on this PC, but maybe I will. I would install one before the next video. So when you are inside MT4, you would see some price value that will be fluctuating inside MT4, either on the phone or on the laptop. So the idea behind the base and quote currency is that that value that you are seeing is the amount of the quote currency that you need to get one of the base currency. Let me use an example that you can understand very well. So we have USD NGN, right? Good. So what we are saying is that in this context, the USD is the base currency, and then the NGN is the quote. Oh, no, that's not base. And then the NGN is the quote currencies. So that means the NGN is quoted against the US dollar. And what I wanted to drive at is that now when you see the pricing charts of every currency pair, you see what you see as that price is the amount of the quote currency you need to get one value of the base. Let's take this to the USD NGN chart so that you can understand what I'm saying. Let's copy this and then let's go to USD NGN. Good. So we have 1532. So what I'm trying to say to us is that when you go inside MT4, you will see some prices on MT4. But let me see if I can open my MT4 here and maybe turn my screen to us that we may see. All right. So I really don't know if we can see those prices. Oh, this is not good. But there are prices on it. When you download your MT4, you will see. So what I'm saying is that you see these prices. This just simply means, of course, the pricing quotes of the currency pairs, but it also means that this is the amount of the quote currency you need to get one of the base currency. Now, the honest truth is when it comes to making of money, is this knowledge important? In fact, it's not necessary, but you just need to know it. So for USD NGN right now, what I can see here is 1530. And remember, I said that the value you see here is the amount of the quotes you need to get one. So if I need to get $1 right now, how much naira do I need? 1532. That's just the correlation. That's the essence of those things that are here as the pricing, because that is what you also often see on the charts. And just so in case you are wondering where that pricing level or that price quotation is coming from, so you can understand. So when we are talking about GBP USD, for example, in this situation, if I will ask you which currency is base, if it is GBP, and then which one is quotes of course, it is the USD. So meaning that the value that we will be seeing here, nope. I need to delete this. Excuse me, please. Thank you. Meaning that the value that we are seeing here, 1.23564, is the amount of dollar I need to get £1. Let us confirm that from Google. So £1, nope, £1 to USD. And you see 1.24. And let's check here. What do we have here? 1.23, almost approximates. Do you get the idea? I believe that is clear. So having understood that, we would move to the next lesson that we have on our journey. Welcome back. The next thing we have on our board to learn as we make progress in our journey is who can participate in the Forex market. Because you see this Forex market, who they talk, so the matter long, the story long, giddy giddy gone. But the question is, who are the people that can participate in the Forex industry or in the foreign exchange markets trading? And the honest answer is that currently anyone can, anyone can, anybody. However, there are several major different kind of players in the industry that we all need to pay attention to. And once again, let us come and consult Google. Who are the players in the Forex market? Awesome. So you can see we have the commercial banks, central banks, sovereign wealth funds, hedge funds, investment firms, forex traders, retail traders. Now we be that. Now we they go retail trader or forex trader, and then we have the brokers, and then we have proprietary trading firm. Those are the prop firms. So what I'm trying to say to you is, to answer this question, is anybody can participate in it. Yeah, over time, the market has been evolving. Before now, not anyone could participate in the bigger picture of the Forex market. Trust me, like the people that could participate in it were the people that were called the big guns or the whales. But right now, it's like the entry barrier keeps getting reduced and reduced and reduced till now almost anybody can participate, even with $1, because there are brokers offering what we call cent accounts. When I started trading Forex, the least capital needed was $200. But right now, there are brokers that allow you to fund as low as $5. So I'm saying anybody can, but that doesn't eliminate the fact that we should understand that there are people who actually move the markets. Let me put it that way. Examples are all these central banks. Because take, for example, go to central bank in Nigeria now. You see different kind of persons there with different kind of currencies. Oh, I have Naira. I want to buy $10,000. Oh, I have Naira. I want to buy pounds. We are currently in the Japa season where people are running out. That's exchange. That's going on. So I'm saying there are different players in the market, but when it comes to CFD markets, we are called retail traders. And when it comes to the CFD markets, before now, not everybody could participate, but with time, it keeps getting better and better. And the answer to that question now is, when we say who can participate, the honest answer is anybody. Anybody can participate in the Forex markets right now. So let us make progress as we proceed to the next thing on our curriculum. All right, so as we make progress, the next thing we want to look at is, when it comes to trading the Forex market as a retail trader, what are the kind of applications or platforms that you need to trade the Forex market? Well, there are numerous platforms out there. That's number one, but you don't need too much. So number one is MT4, MT5. Let us check them out. MT4, actually both MT4 and MT5, they both look the same. This is the icon or the logo for MT4. And then there is also MT5. So what's the difference between MT4 and MT5? Since 5 is higher than 4, MT4 and MT5 both look the same, but MT5 has more sophistications, as it were, than MT4. There are people who prefer to use MT4, there are people who prefer to use MT5. For someone like me, I use both because I trade both currency pairs and synthetic indices. And synthetic indices are only offered on MT5, while I trade my currency pairs on MT4. There's no reason. There are people who prefer MT4, and there are people who prefer MT5 over MT4. But as for me, I just prefer MT4 and MT5 so that I can watch two different apps when I'm trying to check my trades. Because if all I'm using is MT5 and both my currency pair and my derivative accounts are logged in on MT5, that means I have to be switching between two accounts. You may not understand what I'm saying, but those who are professional or those who have traded synthetic before now and those who have traded currency pair will understand. So you need MT4, you need MT5, then you need TradingView. This platform now that I'm using to write all these things and analyze all these things is called TradingView. Now, TradingView has the web platform. This is the web. They have the app. You can download both the app on both phone and PC for the app. Now, you can use TradingView on your phone and on your PC as an app. On your phone, it's advisable that you only use the app. I've not tried using the web before, but the last time I tried it, it was ugly. I don't even think I know anyone using TradingView web on the phone. But on PC, you could either use the web, you could either use the app, but I just prefer the web. So you need MT4, MT5, TradingView, and then we have TradingView binary. Which one is TradingView binary? This is them, deriv, synthetic indices. Okay, so this is one trade I took yesterday, 1:3, got to my TP, but that's not why we are here. So TradingView binary or deriv, it is different from the one for GBP US, and in fact, it is even different in several ways, but just take note that a TradingView exists for them. And why TradingView? What's the awesome thing about TradingView? So the awesome thing about TradingView is that TradingView has a whole lot of features that you can't find on both MT4 and MT5. So TradingView for most people in Nigeria is just a platform for analyzing your charts. What that means is that, you come to TradingView, we analyze the charts, then we go to MT4, MT5, and go and place our trade there. So we also have Match Trader, and then we have C Trader. Match Trader and C Trader. Let's check them. I've never used them before. Yeah, so Match Trader. Okay. All-in-one trading platform with TradingView charts. That's amazing. Oh, awesome. And then we have, let's check their logo. Okay. This is what the interface looks like on the laptop. Awesome. Actually, not bad. And then let's check for C Trader. Yeah, almost the same thing like Match Trader. So these Match Trade, C Trader and Match Trader are new platforms that just came up. And they are also platforms that I've observed that most prop firm uses. You rarely find a prop firm that still uses MT4 and MT5 except for FTMO. I personally don't trade a prop firm account yet for reasons that are best known to me, which is okay, then let me say that so it doesn't change your journey or your process. But basically, that is it. So the applications you need are MT4, MT5, TradingView, either on your web or PC, but app, either on your PC or on your phone, but app for phone, TradingView binary, Match Trader, and C Trader. TradingView are basically for analysis. That's all we do. You can't take a trade on TradingView. Of course, there are countries where you can take trade on TradingView, but in Nigeria, you can't because most of the brokers that are on TradingView are not in Nigeria. And for some that operate in Nigeria, I really just don't see any reason to it as an individual. So all we almost do is come here, analyze, and then we go to MT4 and MT5 to place our trade. So like I said before the next video, I would ensure to install MT4 and MT5 on my system so that I could show us some things because I basically just use my system for analysis and then other works as it were. So now let us talk about how to use Trading View because like I said, there are things you cannot, will never find on MT5. But on Trading View has a lot of properties, like a lot. Look at the interface alone. The interface alone is beautiful. Or you know what? Let me pause this video here and then in the next one, let me install MT5 so that we can see some basic differences between the MT4, MT5, and then TradingView itself. And then we look at how to operate TradingView platform. So I hope you are enjoying it. See my life. I believe you are enjoying your lesson. So please do well to follow through these lessons, like I said in the welcome address. And then, of course, I look forward to seeing you on the other side as you progress with your learning.